Rent growth levels are cooling off in Chicago just as apartment construction is ramping back up. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Windy City update. Not long ago, Chicago ranked among the U.S. leaders for rent growth. And as of third quarter 2012, Chicago is still above the national norm, but no longer among the elite. Take a look at this chart showing year-over-year rent change, and you can see that hikes came in around 5 to 6% from Q2 11 to Q1 2012, peaking at 6.4% in first quarter, and that was the Metro's largest increase in more than a decade. But since then, the market has really cooled off. Rents up 4.4% annually as of Q2, and then 3.9% annually as of Q3, and that was the smallest increase seen in 7 quarters. And let's drill a little bit deeper to see what's happening in that rent growth number. And what we can see is that the slowdown really traces to what's happening in the urban core, which happens to be where construction is ramping up most significantly. Take a look at the Loop and the Streeterville River North submarkets. 2 quarters ago, year-over-year rent hikes of 13.4% and 9.5% respectively. And as of Q3, still strong, but not nearly as strong, annual rent growth of 6.5 and 6.1% respectively. So still good rent growth, but that's a significant drop-off because these have been the 2 spots really driving up the rent growth numbers in Metro Chicago. And we did expect to see those rent growth numbers cool off a bit with construction ramping up, but we also expected to see the other 14 submarkets be able to maintain or maybe even see better rent growth in some spots, and that just has not happened. Of those other 14 submarkets, 2 quarters ago, annual rent growth came in at an average of 4.6%, but now just 3.1% annually as of Q3. And perhaps there are some pretty good reasons for rent growth levels to be cooling. Apartment demand, for one, was surprisingly weak in third quarter, just 131 units absorbed. That wasn't enough even to keep pace with a moderate block of new supply, with 844 units completing in the quarter. So occupancy inched back 10 basis points, 95.8, still up 30 basis points year over year. So the rate is still strong, but that is about 100 basis points below Chicago's pre-recession highs. Now, the other big factor, as we alluded to earlier, is apartment construction. Apartment construction is at the highest levels that Chicago has seen in a decade. 6,350 units underway at the end of 2012's third quarter, and 2/3 of that total is located just in those 2 urban core submarkets, the Loop and Streeterville River North. Only one other submarket in Metro Chicago has more than 400 units under construction, and that's North Cook County, 631 units underway. And of course, this is in line with what we're seeing nationally. That is, urban core, walkable, high-end luxury products are what investors are financing all across the country when it comes to apartment development of late. But this is an awful lot of very similar product entering a relatively small geographic area in a short time period. So it's almost certainly going to be weighing down on apartment fundamentals for quite some time, at least in the urban core. So let's wrap it up with a submarket highlight for you, Linkin Park Lakeview. This is another urban core-ish submarket just north of the Streeterville River North area, but this one hasn't seen nearly that type of new development of late. So occupancy is a Metro best 98.6%, and rents were up 6.1% annually. And even though this one's close to the downtown submarkets, it's a good bit more affordable, so it may be protected by that big crush of new supply that's about to hit those other spots. So overall, for Metro Chicago, we do expect that occupancy is going to hold flat in that high 95% range, close 96%, and for annual rent growth to remain just under the 4% mark. And that forecast does assume that we continue to see a slowdown in the downtown submarkets, but a little bit more momentum in the suburbs. So that wraps up for Chicago, and until next time for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.